All right, welcome back for another recap. Today we're doing the monthly recap for January 2022. So I recorded this whole entire video. I made my thumbnail, I did everything, uploaded it to YouTube, and started getting some comments that there was no audio. So there was no audio in that entire video. So here I am re-recording. But it's all right. We can do it again. We'll do it even better this time. But so this month, January 2023, we started getting some more momentum in the market. Late 2022, Q4 2022 was very, very slow and choppy. I started to take a little bit more losses in October and November. Started to size down a little bit for the rest of November and December until we started seeing shifts in momentum and started to get a little bit more consistent. But now we are starting to see some decent consistency, which is really, really good. And that's usually a sign for me to, start sizing up a little bit, start hitting that pedal to the metal. I want to get to where I was before I started sizing down in October. So, before that in October, I was hitting solid between anywhere from $0 to up to $700 or $750 on the day. That usually was the range on my green days. Now, sizing down, I was only hitting maybe up to $150, $200 at green days. There's a long stretch for maybe about a month and a half where I didn't have a single 3-digit green day until about this week here, January 24th, where I started to have a couple $100 green days, which were really nice. But very consistent, as you can see, for January. Momentum started to shift, and I started to get a little bit more aggressive incrementally at the last half of January, and the results started to show. I was still consistent and started to have some decent days. And now I want to push it even farther. I want to push it to getting back to those $300 days, those $400 days, and even beyond that. I want to continually, push it beyond there and get to that 1K day, which is where my sights are set next. But for January, I did have a pretty big personal change in my life. I did make the move from sunny Florida to mountainous Tennessee. Here I am in beautiful Tennessee. I will use a photo of the landscape that I overlook from my apartment building as my thumbnail, so you guys can get a sort of an idea of where I am here in Tennessee. But I did move in the middle of January, so my birthday was actually landed on MLK Day, which was good because we all heard that story about Ross Cameron in 2020, was it 2022? He traded on his birthday and he lost like $250,000. And trading on your birthday is definitely risky because you want to be green on your birthday. And if you have that idea that you have to be green, it could actually work against you. So kind of happy that it turned out to be an off day because of MLK Day. So I didn't trade on my birthday, and that's the weekend that I moved. And so pretty much the 2 weeks leading up to the move, there was just so much on my plate of just having everything organized for the move, getting all this, all the changes done beforehand to ensure a successful move. And so there's a lot of work that needed to be done with packing and setting everything up and changing addresses and all that. That I didn't want that added stress of trading if I were to have some big red days or the emotional volatility that comes with pushing your share size. I didn't want to really have that added to the stress of moving. So I kept the share size very, very small in the beginning of January. Some of these green days are very small, $10, $14, $20, $40. But, obviously those green days do add up. And, just think about like $45 right here. This is a nice tank of gas. So always got to think about the bright side of your results. And after the move, after, I got everything set up this week here, the middle of January, this is where, I settled in, started unpacking and got everything situated. get back into trading. Right now I have my own designated office space, which is good. I never had that before in my old apartment. Pretty much it was a living room and an office in one, and it actually got a little bit cluttered and wasn't really the best environment as far as, you know, distractions and other things going on in the room. So now that I have my own designated office space for trading, it definitely you know, allows me to stay more focused. Not a lot of distraction as there was in my other apartment. And you know, I just like having that ability to be a little secluded from, you know, other people and other things, so I can really focus on the charts and focus on my trading. So I really enjoy having this separate office now. But I got settled in and I started to push my share size, you know, back on that grind of trying to stay consistent while pushing the share size a little bit each and every day. And, you know, I did see some bigger green days here, 167, 100, 160, 106. But, you know, I still need to push it even more. Like, I want to push it even more. And today, actually, this is February. I will go over the recap in a separate video. I want to keep this on January, but I was going to say something about today's trading, about pushing my share size. But let's go over the stats for January. So January, my stats, I really liked my stats for January, and that seems to be there seems to be a trend of where I'm headed in my strategy. So in 2022, my accuracy was about 60 to 65% on average. This month I'm clocking in at 57%. So a little bit lower accuracy, but I make up for it for my risk reward. My risk reward in January was positive, and in 2022 my average was actually negative, or slightly negative, with a higher accuracy. And my profit margin actually this month is 5% higher than the average of 2022. So there seems to be a trend, you know, as I get better at managing my risk and letting my winners run a little bit, there seems to be a shift of accuracy to bigger risk reward. So my accuracy might be declining a little bit, but my risk reward is also increasing, and that kind of comes with letting my winners run a little bit longer, because if I'm letting my trades go a little bit longer while it's in my favor, some of the time they're going to come back and stop me out for break even or a small loss, and then also some of the time they're going to keep running and I'm going to capture a bigger profit than I've had in the past. So that kind of influences my accuracy and my risk reward. As we see here, my average win is a little bit bigger than my average loss, which I'd never had in the past. My largest winning trade for January was actually only $100, and that was on GNS the first day it gapped up. It was for the red to green move for the break of the pre-market highs, and it was a pretty decent trade. However, I did have a little bit of FOMOing it into the high. I literally bought at the pre-market breakout after it was extended on the 1 minute, which is a risky entry. It's a very risky entry because a lot of times if it's extended on the 1 minute and it rejects that pre-market high, you can actually take a pretty serious loss. So I always have to keep that in mind, the downside of the risk on some of these trades. And always keep a mental note, you know, even if the trade worked out in your favor, was it a good trade, even though you made money? On that trade on GNS, I would have to say no, it wasn't a good trade, even though it did work out in my favor. My largest losing trade was, actually that's a lie there, I did not. So my largest losing trade for January was actually only, we're looking at, here it says $45. So $45 is my largest losing trade, which is really, really good. Probably mostly because my share size was lower, but I didn't have any outsized losses that really kind of sunk my P&L or sunk my profit margin or my risk reward ratio, which a lot of the times there's that one day every few weeks that you have that one catastrophic loss that completely wrecks your metrics for the month. But this month I didn't have that, which was good. And I want to keep it like that. And it seems like the more experience I have, that day where I capitulate in the red is becoming less and less frequent. And I think that's just because of my gaining experience in the markets. You know, now I'm coming up on 3 years of trading in this account. So 3 solid years almost of daily trading is really starting to, you know, see the results of, you know, being consistently green day in and day out on a weekly and a monthly basis, which is the most important. Obviously, you're not going to make money every single day, but if you can be green by the end of the week and at the end of the month, then you're showing consistent improvement for sure. So that's really the most important thing, is if you can stay green on a weekly and a monthly basis. But don't be so fixated on the daily profits or the daily losses, because some days you'll have, you know, bigger green days, some days you'll have smaller green days, some days you'll have small red days. And, you know, unfortunately, some days we'll have some big red days, and those are the days that you want to eliminate as much as possible. And those days, for me, they came around, you know, every few weeks. I would have like a catastrophic, like maybe 2 or 3 average green day loss, and that would really wipe out my profits. But I want to keep that less and less frequent, and I think that's what's happening, you know, as I'm getting more experience. So my net profit on the month is $1,030, so, you know, pretty good with my share size, you know, relatively small share size. My average position cost only $426, so really good with my average position cost. You know, being able to pull out $1,000 with that position size is really good. If I can, you know, boost up my share size a little bit more and keep that consistency, you know, that would be really good. You know, that'd be really good stats. But, you know, that's in a perfect world. You know, usually when you start sizing up a little bit, you start to get a little bit more attached to your trades, and you might let a loser go 1 or 2 seconds longer than you normally do, and it completely wrecks your metrics. So, you know, the key is just being able to stay level-headed and trade how you were trading on small size, but with big size, which is more difficult than it sounds like. But let's go through the insights here. So taking out nominal and trading volume and we'll go through, actually no, I actually want to see my running P&L. By the way, if you want to check out Trade Journal, it is completely for free. You guys can sign up for this. The link will be in the description. You guys can sign up, and it's a great place to journal and track your trades for complete free. For TUS and some other brokers, you can you know, import unlimited imports for free, which is very valuable. A lot of the other journaling and metric sites out there, they actually charge you to do unlimited broker imports. So if you want an unlimited broker import software, then sign up for Trade Journal. The link will be in the description. But let's go through the running P&L. So a lot of my running P&Ls on the day were, you know, I was pretty consistent. I didn't really have any big drops or any capitulating red days. This day was a little bit choppy. You know, I was green and red and back to green, but really on a small size on that day. Here I was consistently just grinding green, which is good. Here I went from green at the open to red, so that's not the best. Here, you know, I dropped off a little bit on those red days, and then the rest, finishing off the month, pretty consistent green. You know, pretty consistent. So that's my running P&L for January, and that's really what I wanted to go over today. Really, there wasn't really one big winner or one big loser this month. Just a lot of consistent base hits, adding up to a decent profit at the end of the month. We'll see what the rest of the year has in store, and what kind of momentum we're going to be getting. Today, you know, at the end of January and the beginning of February, we have MSGM, MGAM, EBET, a lot of those stocks popping up, making big moves. So we'll see if that contributes to continued momentum into the next few months. I am going to be starting a work from home job soon, which there's actually quite a long training program that I need to go through for about 7 weeks, which starts pretty much at 10 a.m. Eastern time, and I have to be there, which is like a 20-minute drive. So I can't really trade the open for the next 7 weeks. So for 7 weeks, I'm pretty much going to be trading pre-market only. I'm sure that's going to have an influence on my trading statistics for the next 7 weeks. But, it might actually be something that is good because historically, or statistically, my pre-market stats are actually a little bit weak, a little bit lacking. So maybe if trading pre-market only will actually push me to improve my pre-market skills and being able to take some profits pre-market without trading the open. But for the next 7 weeks, I'm not going to be trading the open at all. So, maybe it's a good thing, maybe it's a bad thing. Long term, it's hard to tell, but it seems like, 7 weeks is going to make a difference. And, even after the 7 weeks, I'm going to have a work from home job that works around my trading schedule, which is good, which is after, be working, the afternoon and the evening and trading in the morning after those 7 weeks. But yeah, for those 7 weeks, I'm going to be probably leaving some money on the table, but it's definitely going to be worth it on the other end because I'm going to have two sources of income, which will allow me to, take a lot of that stress off of having to make money in the markets every single day, and trading the chart, trading the patterns, and not trading my P&L, thinking I need to be green or have a certain amount of green every single day, which can actually influence how you do on the day. But yeah, I think in the long term, this could actually be good for me. Just trading pre-market for 7 weeks could actually improve my skills pre-market. And, after those 7 weeks, I think there's a solid chance that, I'll be able to trade pre-market a little bit more aggressively, a little bit more swiftly and more accurately than I've done in the past. Because it seems like pre-market, I'm pretty much small red, small green, small red, small green in my statistics for pre-market. We can take a look, actually. So I'm hoping that just focusing on pre-market for the next 7 weeks, even though I might be losing some money on the table, I think it actually could be good for me. So where do we go in here? Insights, yeah. So days and time. So pre-market, if we look here, is from 7 a.m. to 8 a.m. Small green, from 8 to 9, small green. I really make a bulk of my profits after the open. So before the market opens, pre-market, I don't really do too well, or it's not like my shining hour. We can take a look at on January to see how I did pre-market. So yeah, red at 7, small green at 8, and then making a lot of my profits at the open. So, there's definitely a lot of opportunity pre-market. This month we've seen a lot, between GNS, EBET, MSGM, MGAM. There was definitely opportunity pre-market this month, and, I left a lot of money on the table for sure. And there's definitely, a lot of opportunity just to get, if you can get your daily goal pre-market this last month in January and walk away easily. So there is really actually no reason, for the next 7 weeks that I can't hit my daily goal pre-market and then go to my training session. I don't really need to rely on the market open. There's plenty of opportunity pre-market. So we'll see how it goes, but it's definitely something I need to do. Right now, my trading is not at the point, again, where I can be living off of it solely as my sole source of income. I just don't make enough consistently to have this as my only source of income. So I think it's smart, that I do get that secondary source, that I'm, out here, providing for myself, you know, rent, groceries, all that stuff, utilities, trying to, you know, go on dates and all this stuff, you know, it definitely adds up. And, you know, with inflation, it definitely pushes your budget a little bit. And I'm sure some of you guys feel it as well. You know, for some of you guys who live at home, you know, have it a little bit, you know, less of a stressor on you. You're probably not always thinking about it. And definitely a blessing. So definitely be grateful for, you know, if you're living at home still, you know, you're not really, you know, paying, you know, your entire way. You're having help with your family, and that's definitely something good. You should definitely take advantage of it while you can. Especially if you're learning trading. If you're learning trading and you're just going through the learning curve, I would recommend living with your parents if you're at that age, you know, right out of college or in college or out of high school. Definitely try to stay with your parents as long as possible and try to learn it, because once you go into the real world, once you start working, like that's going to take up a lot of your time, a lot of your responsibility. There's going to be a lot more stress because there's a lot more financial obligations that you're going to have on your plate. And that can kind of just all snowball together and cause like a huge burden on you mentally, which can influence your trading. So, you know, if you can stay with your parents, you know, a little bit longer after college, you know, just so you can learn, or after high school so you can learn and put in that time for trading and not have so much stress or so much on your plate, that'll definitely help you out. And definitely don't waste that time. If you're not working and you're and you know, get to just kind of focus on trading and not have to go to work. Don't waste that time playing video games, going out and partying, going out, you know, doing nonsense stuff, you know, because with the learning curve, it's just about time. You got to keep getting that screen time. You got to keep taking, courses online or like stuff on YouTube. There's so much stuff for free that you can consume online to keep learning and keep learning. You know, reviewing your charts, you know, reviewing your trades. There's just so much to keep doing. You know, to learn faster on that learning curve, to, you know, progress faster. You know, seems like a lot of people can get it done within 2 to 3 years to start getting consistent gains. So if you don't waste that time, you know, you're looking at a pretty short learning curve. But for those of you who do have a job and you're trying to balance trading with work, you know, I completely understand, and definitely your financial, physical, mental well-being has got to come first before trading. You know, if you have to get a job, you got to get a job. You know, you can't not pay your bills. So, you know, if you can get that pace covered while still allowing some time, just a couple hours every day to trade or review or study, then that's the secret formula. And then, you know, eventually you can slowly transition over to full-time trading once you start getting some consistent gains. You know, you get to, you know, start to see that, you know, a couple $1,000s every month. And then maybe you can start transitioning to just working part-time. And then let's say, you know, you increase your share size even more. You start making $5,000, $10,000, $15,000 a month. Then you can start to think about replacing that part-time job or that full-time job with trading full-time. And while also, you know, maybe you could also be looking at other avenues or sources of income within the trading realm to also get a little bit of passive income as well. That would really help. Also, you know, with affiliates, you can make a YouTube channel. There's so many things to do to make a little passive income here and there to kind of serve as a little part-time job as you become, you know, more educated and you have more things to offer the industry. So yeah, there's lots of ideas, but, you know, that's my little spiel for the January 2023 recap. Hope you guys enjoyed. If you guys did, please hit the thumbs up button. Also subscribe, and I'll see you guys in the next recap. All right, peace.